Hello, guys. Hello, people. This is your boy, JD Crux Pips, once again. And this is another video on the Agimat FX 2020 update. So, in this video, I'm going to talk about trends. Just before I move on, remember to hit the like and subscribe button just to support the channel. And, I appreciate that every time you do that. So, anyway, we're going to be talking about a very important thing in trading and how you can apply it to using the Agimat 2020 update. If you haven't seen any Agimat videos before, I suggest you always go to the video made by Dennis, the creator of Agimat, to understand and learn how he uses it. Another good video on Agimat, even though it's the old version, is Uncle Lee's video, the Hero Zero method, the 4 confirmations. These are good places to start because they lay the foundation for how people have been using Agimat successfully. I also have prior videos to this one that talks about Agimat, the basics. You might want to check out those videos as well so you can learn. But in this video, it's going to be all about Agimat 2020, the update, the new version of Agimat. I did a prior video explaining the basics, but today I'm going to be looking at a certain strategy based on trends using Agimat 2020. So what are trends? Trends are when you have price, moving in a certain direction, either to the upside or to the downside. When price goes to the upside, you have an uptrend. And when price goes to the downside, you have a downtrend. Pretty simple, right? Now, there's some important things. Again, this is just for YouTube. My students have the benefits during my training classes to understand how to properly apply trends. But in a nutshell, trends are basically, how you spot where the market is heading or where it has been heading to. If the market has been going down, you can determine that by, analyzing the trends. And the market has been going up, you can determine that by analyzing the trends. Now, there are two possible exponential moving averages that are one of the best in analyzing trends. And those exponential moving averages, or EMEs as they are called, are the 50 and the 200, which I use personally. There are a lot of exponential moving averages out there, but the 50 and the 200 moving averages are one of the most looked at moving averages used by a lot of traders out there. Even the big boys, financial institutions, they use the 50 EME and the 200 EME. The 50 EME kind of gives you an outlook into a short-term trend, while the 200 moving average gives you an outlook into what the medium to long-term trend is all about. So right now on the screen, you can see I have a red line and a green line on the Agimat 2020 template. The green line denotes the 50 exponential moving average, while the red line denotes the 200 exponential moving average. Now, why do I have them on the charts? It gives me a visual representation looking at the charts to know where price is going to or where price has been heading to, for some time. Right now it's on the 15-minute charts, and like I always tell you in my prior videos, you do not, I advise, not that people don't do it, but I advise that always start to look at your analysis or trade off the higher time frames, preferably from the daily and the 4-hour. They are much more suitable than trading off the 1 hour and 15 minutes. Usually those time frames for me, again, it's my opinion, are used for entries, not for you to analyze off them. And if you have to analyze off them, you probably want to scalp off them. Because where the money lies is, monthly, weekly, daily. Daily really crucial. Then, the 4-hour too, very good time frame if you want to get good moves as well, because it's kind of the momentum time frame to tell you where most of the higher ones are heading. So anyway, I'm going to show 2 screens. This is AUD CHF right now. So I'm going to go to the daily, and I'm going to show you what I mean. Now, on the daily time frame here, you can see this the red line, let me just clear again, sorry about that, just so that we don't have any misconceptions. Okay, so yes, okay, the red is the 200 moving average. Okay, so the red line here is the 200 exponential moving average, and the green here is the 50 exponential moving average. Now take a look from the left, see what has been going on this pair, ADCHF. You can see that price has actually been trading under this pair, under the 200 exponential moving average for quite some time. And it is still trading under the 200 moving average, exponential moving average. Now, you always notice that it also goes, under the 50 EMA, bounces over it, comes down, touches the 50 EMA, doesn't usually stay too much under the 50 EMA. In this case, it went above 50 EMA, but notice that when it got to the 200 EMA, it kind of faked out of it, came down, faked out, but still came all the way down to trade below it. Came down through the 200 EMA, came down through the 50 EMA, and it's still trading below it. Now, it made a move again, bounced away above the 50 EMA, touched somewhere around the 200 EMA, a bit of consolation here in between those EMAs, blah, 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 went up again, then all the way came down. Now, this tells you that the 200 EMA is a really good EMA when you want to identify what the trend of the market is, the strength, the strength in terms of, is it bearish or bullish at the moment? I can tell you, looking at the daily time frame, ADCHF is very bearish at the moment. So any trade you take off the AUDCHF pair that is going to go against the trend, which is bullish, it's going to be a counter trend. It may also signal the start of a reversal of the trends because you don't know when to try to reverse. It may signal the start, but as it is now, any trade you are taking that is going to be a buy setup is going to be counter trend to the present bearish trend going on AUDCHF. So this gives you an idea of when you want to trade, what you are looking at. I'm not going to talk about, entry, stop loss levels and all that. That's for my training class, but this is about just a good visualization of what the trend is all about when you're trading. Now, you notice that in contrast to the 200 move EMA, the 50 EMA, price was also trading under the 50 EMA, but there are times when price really went above the 50 EMA, only to come down there. So the 50 EMA, again, like I said, it doesn't give you that long-term projection on what price is doing, but actually gives you mid to short-term projection of what price could be doing. So don't take something that is mid to short-term as serious as something that is long-term. You have to put precedence over what you see. Long-term, this is bearish. So if you have an opportunity to go long short-term, always think about that short-term. It's going to be short-term. This is still bearish. So put that at the back of your mind. It may also be the start of the reversal of the trend. You never know. No one knows. But because as it stands now, it is still trading below the 200 EMA, you can be sure that it is still very, very bearish right now. The trend is still bearish right now. So that's what it is in a nutshell about trends. Not really something that is too intricate, but using these two EMAs plotted on your chart, it gives you an overall view of what the short-term trend is and what the long-term trend is presently on AUDCHF. But long-term and short-term, it is bearish. Any trade going against them will be a counter trend. So you need to be careful if you are going long on AUDCHF. Again, for my signal classes, my private classes, and my signal channel, which I'm very excited, about. People have been calling me, trying to get information and all that. People have been indicating interest to join, and so far so good. It's been great. We kicked off as of the time of posting the video. We started off on Sunday. Posted trade ideas, and let me just show you inside here a couple of trade ideas that we've been able to post, and and how things have been going on. I mean, it's incredible. It's incredible. Just hit TP on that. So we're gonna have this. And look, this is actually brilliant. We started off here. We've had, I'm going to be giving information as trades go on, telling you stop loss, entries, take profit entries, telling you when to enter, very important information about waiting for candle to always close before you make your entries and all that. USD was a good trade we took. ATP1, easy, based on what we teach. AD card is in the making, not triggered yet, but hopefully if it triggers, we'll also win. Again, we're not going to win all the trades, but we want to stay profitable. We want to have a consistent and high win ratio. That's what makes you profitable in the game. But anyway, let me go back to the video on what the main topic is all about. So back to the trend. So now you have Agimat FX 2020. You are looking at AUD CHF on the daily time frame, and you tell yourself, okay, based on the rules, it has this arrow right here, which tells you that there's possible reversal coming up. You don't have this yellow box, and you don't have, let me increase this just a bit. You don't have your trend line, that changes color to signify a change in direction. You don't have anything telling you to go long just yet, but there are ways you can go long, which again will not be covered in this video. There are ways which are actually take off trades even off this AUD CHF and still be profitable. But right now you want to stick to the rules. You want to know that I'm just trying to let you know that if you intend to take a trade based on AUD CHF right now, you are going against the main trend. So keep that at the back of your mind, so that whatever trade you take here, be mindful of where your take profit levels are going to be realistic. Your take profit levels are not going to be that much because it's against the trend, and you want to be in and out of the market as soon as possible. You see the reason why we always say to look at these things from the higher time frame. This is the perspective of what the market on AUD CHF is right now. Let's go down to the 4-hour chart. So on the 4-hour chart, things are a little bit different. There's been a little bit of rumbling going down here. It hit a peak, went up. This arrow, like I said, doesn't repaint. I've tested it. It doesn't repaint. It stays there. So this was a really good move. You can see that even against the main trend, people could still profit off here. Let's take a look at that. How many pips was that if someone took this move, got in the good entry? This was about 60 pips. It's not bad of a counter trend move, and this showed up and all of a sudden it started coming down, going back into the main trend. Now, is this going to continue all the way down? Who knows? Nobody knows. Is this going to be the start of a reversal? Who knows? All we are in for the market is to take pips off, but we need to understand where it's headed and set realistic targets when we're trying to take pips off the market. So anyway, we looked at the daily. We see that it's still bearish. I mean, price action has been trending down below the 50 and the 200. We looked at the 4-hour. Price action is still trending down below the 50 and 200 EMA. It tells you it's still a bearish situation, even though there was a good opportunity to take a counter trend here. Whoever took this will have been smart enough to get out as quickly as possible. So let's go down to the 1-hour chart, which I consider for entries, and see what's going on there. So looking at the 1-hour chart, you can say it's kind of a different story. See how the story changes from the daily to the 4-hour and the 1-hour. On the 1-hour right now, you can see price has been meddling around the 50 EME, telling you that might want to go up, might want to go, might want to go up, struggling a bit. Hasn't really had, that momentum to get above the 50 and above the 200, not just yet. It got above the 50 here and came right down here. Because the bearish momentum, looking at the daily and the 4-hour, is strong. So the 1-hour has no other choice than to obey, what is happening on the higher time frames. That's what it's all about. Look at higher time frame. They give you a perspective, and you know what you're going. Just don't go into the market blindly. You have to be realistic. You have to set your targets, your stop loss levels before you even attempt to go into the market. So looking at trends is a very good way to analyze, those facts. So here we are on the 1-hour, chart of AUD-CHF, we can see things that begin to look a little bit different. Price has been milling around the 50, in around the 200, but it's still basically under the 50 and 200, even on the 1 hour chart. So the last time frame I could look at, and which you could look at as well, would be the 15 minutes time frame. So looking at 15 minutes time frame, it is very, very, very clear that price is on the downtrend. You can see that. So all if we take a head count of the time frames we've looked at, and we see, we looked at the daily bearish, 4-hour bearish, 1 hour bearish, 15 minutes, price still trading under the 50 and the 200. I mean, you need to have heart of steel to go long. And if you do go long, you need to be sensible enough to know what your expectations are, that you cannot be in this market on a long trade for so long, because the main strength of the market as of this time is bearish. So that's it, guys. It's not going to be a long video. It's just going to be a video that goes straight to the point, tell you what trends are all about, how the 50 and the 200 EMA are used to gauge the trend, and doing a top-down analysis from the daily to the 4-hour to the 1 hour, even to the 15 minutes, to understand what your position is on a pair before you attempt to take, a trade on the pair. Like I said, it's possible to take counter trend trades and make profit, following the rules that Dennis, the creator of the software, laid out, following the 0 euro method of Uncle Lee, following the 4 confirmations method. If you are using the old Agimat, it's possible to take counter trend, but you need to know and have that back of your mind. Like, when you're taking counter trend, don't think you're already in the start of a new trend. You need price to actually trade very well above this very important exponential moving rate, the 50 and the 200, very key moving averages. That when price begins to trade above or below them, it is, it gives you a sense of security that, okay, maybe the trend is now going in the favor, or the way you are looking at it. And the moving average indicator I use have this alerts that show you when price. This was alert that showed that there was a crossover, and price came down, another crossover. Anytime crossovers happen, price just comes down. They're lagging, but they give you what you need to know. But anyway, that's the video for today. I hope you can even understand that trends are a very good way for you to judge where the market is heading, and when you decide to take a trade on a pair, to understand how to set your expectations on this pair. Remember again that classes are still going on. Signal channel is still there. If you want to be a part of the Signal channel, where we do all the analysis for you, we give you those trades that you can take. And nobody's promising that you're going to be a millionaire or billionaire. They will be losing trades, but we want to be consistent. We want to make you profitable. We want to make sure that at the end of the day, we all smile that we've been able to do well in the Forex market. So have a great one, guys. Until next time, when I come up with actual another strategy for the Agimat FX 2020, it will be bye for now, and take care, guys. Have a great one.